Hello and welcome to the Telegraph Studios and Business Reporter's Future of Insurance campaign, hosted by the Telegraph Online. I'm Alistair Greener. Business insurance is all about helping companies manage risk. For 100 years, insurers have collected data on claims so they can price and manage risk. But in the last 20 years, businesses have become increasingly worried about something called emerging risk, which are risks that are new and haven't been seen before. Insurers are desperate to grow, but more and more, growing in business insurance is about growing in emerging risk, and insurers don't know how to handle it. So, this is what we're exploring with Bob Reville from Praedicat. Good morning.
Good morning, Alistair.
So, I've heard this term emerging risk. Could you tell me exactly what that is?
Emerging risk is any risk for which there is no history. The insurance industry is built around using the history of information, history of claims information, in order to predict the future. But some risks, new products, new business activities, new technologies have no history and have never had claims before. And that is a growing portion of the business that insurers need to write.
So could you give me an example of how that's happened?
Well, I think the best example is going back to the history of asbestos. So asbestos was a miracle material. I mean, it was able to stop buildings from going on fire. They could create fabrics out of it that wouldn't catch fire also, and it was incredibly durable. And so it was used in a larger and larger amount of materials. Meanwhile, there was science emerging that it might cause problems. Back in the 1920s, they found that there was a potential for it to cause lung damage. By the 1950s, they had found that there was this rare cancer called mesothelioma that was uniquely caused by asbestos. By the 1960s, they had found that insulation workers, where insulation was being created out of asbestos, were more likely to die. Starting in the 1970s and then accelerating through the early 2000s, it created the largest insurance loss in history, over $100 billion as it spread around the globe. So that was an emerging risk. Through the time that they were writing all of these policies, through the 1970s, they had no idea that this was going to cause the problems that it caused. And then it caused the largest loss in insurance history, larger than any natural catastrophe, any hurricane or earthquake.
So let's look at asbestos, and after that all happened, what did the industry do to manage emerging risk? In other words, what's the next asbestos?
Well, that idea of what is the next asbestos is something that you hear the insurance industry talking about all the time, and for good reason. So what they've done since that time is the largest technology, I'll call it technology, is what they call the emerging risk group. Essentially, it is a group of senior executives who meet periodically and they try and find whatever information that they can in order to figure out what might be out there that is causing bodily injury, property damage, environmental damage, or the like. They are relying upon blogs, they're relying on newspaper articles, they might be relying on particular scientific articles, but the scale of the problem is enormous. And it tends to lead to solutions that they're not terribly happy with. Typically what they do, every one of them, is they create a list, maybe 100 things long, and out of that list of 100 things, they decide in any given year that maybe they'll be able to handle 5 of them, and they create what they call underwriting strategies. And one thing I learned after I started to look at this problem was that underwriting strategy is another word for exclusion. In other words, they wouldn't cover it. So what has happened is in the years since asbestos, what you find is a growing number of exclusions that essentially make the insurance policies that they're selling less and less relevant to the risks of their clients.
So you say exclusions, what type of things are we talking about? What risks are they?
Well, I think the best example is nanotechnology. Cyber would be another example. But in nanotechnology, you have what arguably is the most promising technology of our generation, creating superconductive materials or materials that are harder than anything in existence, or transparent materials, sunscreens that you can spread on, for instance, and have them completely disappear. All of these are technologies that may cause problems. They may read in a blog or a newspaper article, for instance, that there is some concern that some nanotechnology might cause some bodily injury. And then all of a sudden what you have is a concern that all nanotechnology might cause bodily injury, and then what you have is a desire to create nanotechnology exclusions, potentially cutting off the most promising technology of our generation.
I mean, that's the challenge, isn't it? There's a bit of a dilemma going on here, where on one hand, as you say, they just exclude it when actually those wanting that insurance need that the most. But then on the flip side, you have the dilemma where they take it on and they don't exclude it, but then that could be a risk that puts them out of business. Yeah. So what do?
Well, what they have to do is they have to rely upon new sources of information. Relying only upon claims data is not going to give them the answer, because by definition, an emerging risk, they've never seen any claims for it. So they have to find new sources of information. We believe that the approach is to rely upon a different emerging risk group. For us, the world's scientific community is the emerging risk group. You need to find what the scientists are saying are the things that cause the bodily injury or environmental damage or property damage that businesses are doing today.
So how do we access this information that the scientists are looking into?
There are a lot of new technologies that are emerging that you can use to solve this problem. First of all peer-reviewed science is now available online. Indexed from multiple language, translated into English, the abstracts. So you can go and you can develop technologies that search through peer-reviewed science to find hypotheses that chemicals, products, substances, business activities cause bodily injury, environmental damage, property damage. You take those, you convert that into literatures by connecting the articles that are talking about the same thing. You track those literatures over time. You try to get a sense of the literature by creating essentially business intelligence out of the sum of all of those literatures. And you convert that information into a form that is relevant to insurers. So let me give you an example. There was a recent peer-reviewed scientific article that was looking at a registry of women with breast cancer in Southern Ontario. And what they found was that women who were working in canning factories were more likely to have breast cancer. So what the scientists hypothesized was that because in canning, you line the cans with epoxy resin, which is an anti-corrosive. Epoxy resin is made from a chemical called bisphenol A, or BPA, and there's a fair amount of science that says that when BPA gets into the body treats it as though it's an estrogen. There's a lot of science that also says that estrogen can cause breast cancer. So the conclusion was that working in these canning factories exposed to this BPA is causing the breast cancer. So now we can take that information and convert that into a form that insurers understand. That essentially looks like a future claim. And then we can evaluate the science around it and track it over time and give them all the material they need in order to be able to manage the risk.
The thing is, gathering that information and then converting it, as you say, into a language that insurers understand is probably easier said than done. How do you actually do that?
Well, we have, first of all, an approach of algorithmic search. We start with a list of 80,000 chemicals, products, or substances that we that we search through the peer-reviewed scientific literature, and we find the connections between the materials or the products and bodily injury, environmental damage, property damage. We take that, we convert it into literatures, and then we create the scores around that. We also have teams of bioscientists that are extracting some information from the literature, and they use that information to create what is called training data, which we then have technology called machine learning, essentially artificial intelligence, that scales that process so that essentially we are able to digest or read thousands of scientific articles very quickly and convert that into information, solving the problem of the scale of the problem that the Emerging Risk Committee is facing every day.
I mean, that's all very well, assuming the information you've got is accurate, but as we all know, a lot of this research is done by industry giants, and they sometimes are then accused of bias. So how can you actually rely on all of these assessments?
Well, that's the beauty of the solution, that you can actually mine the science to better understand where there might be sources of bias. You can filter out all the industry-funded studies. You can find particular researchers or particular teams of researchers that tend to find the same conclusions and filter that out as well. In general, you can get a better sense of the literature using technology than you can by having teams of people trying to read all of these studies and making sense of them.
Another challenge that I see is that I might be an innovator and I might be a bit nervous of having you around because you're going to put me in that too risky box and effectively exclude me. So how do you sign up and get those innovators involved? Because otherwise this whole thing could just backfire.
Well, I think that the main point is that an innovator should know if peer-reviewed scientists are finding that the things that they're doing are likely to cause bodily injury, property damage, or environmental damage. The real concern is when the business community or insurers overreact. Let's take, for instance, cell phones. In cell phones, there is overall a sense of the literature that it doesn't cause brain tumors, and yet most insurers exclude it today. And if the innovator, the cell phone maker, let's say, first of all, they should know that there is some science that suggests that it might be a problem, but they also should have comfort that the sense of the scientific community is accurately conveyed to their insurer.
So the potential is you're going to sell a lot more business insurance, potentially at higher prices. So what's the knock-on effect? What's the consequence for us consumers?
Well, the idea would be that not everybody's going to pay higher prices, only the ones who are potentially doing things that are harming people or the environment. So in general, what it does is it provides the right incentives to companies to take the right actions, and ultimately will make the world cleaner, safer, and healthier.
Well, it's been fascinating finding out more about emerging insurance, emerging risks, and what the insurance industry is actually doing and how they're reacting to it. Bob Reville from Praedicat, thank you very much indeed.
Thank you, Alistair. My pleasure.